I guess we can start with today. I don't know if people have specific questions. I know we were tracking this a bit this morning, and I guess quickly here, this is one of these things where it gets super close, but I'm continuing to be a bit strict on certain parts of my approach. What we were looking at here going into the day, what I mentioned, I'm initially interested in this being a continuation lower. That's just what I like to see. We've established a daily reversal to get a continuation off of that. That's always going to be ideal in my first expectation. So looking at that, it would have been pretty much getting to the charts early New York session. And the focus for me, if this is going to be a continuation, is we've already established a potential reversal. I can note out invalidation points, although it's not really relevant today because the market is already breaking down. So, I mean, we could mark out that daily wick. We could even refine that level to these up close candles on the hourly, saying we want to see price below that. But it pretty much put in a reversal at the start of the day, and then we're breaking down towards the lows. So that's not too relevant. The focus here and what I mentioned is when we're looking at this to break down lower, if that is going to be the case, I'm focused on this low here because we have an opposing relevant swing that if the market is to engage this low and manipulate it, then if I'm wanting to see a continuation, that is not going to be supporting that idea. And it can even offer a higher time frame idea to switch that bias and trade this to the upside. That's something that I'm noting here as well because I know that that can happen and the market can develop in that way. And this was where it gets super close with this here. It is engaging that low, but if we look to both ES and NQ, it's leaving behind these failure swings on that intraday low. And I am not a fan of that. This is just one of these things where it gets super close to what I want it to do. But leaving that behind makes it really difficult to trade away from that low. I like this to be established. And then let's just draw this out. I know some people were asking MES here. It creates that wick. If we just pretended MES was ES, because I don't look at micros for charting. If this was ES, this is pretty much ideally what we would have wanted to see. And then you get your initial reversal confirmation. We look towards the open 15-minute and 5-minute. And we get a signature here, which would have been just off by a few points for me. This would have been a nice continuation entry paired with the open, paired with a run on a short-term low. And that's how we can move around a day like this where the initial idea isn't necessarily playing out. We understand where the bias can get flipped because the higher time frames are aligned at this low here. And that's exactly what we're getting. Reacting at that higher time frame low, that daily relevant swing. And then we can flip the bias if the market starts to align with that. So that's what could have played out, but these failure swings off the lows is restricting me in that. And it gets very close here. NQ really just had to go a couple more points. With the failure swings at the lows on minis, potential high day set with the 18 candle. After NQ and ES takes out the London highs, forms the initial reversal with the SMT. High day has already been set. Still waiting for a confirmation. Okay, so that is looking at a short-sided move. Okay. To be honest, I wasn't really thinking much of that. I mean, here, if you're gonna look at that opportunity, what are these NQ trades? Where's that ES? You have NQ and ES. So yeah, you're looking off of this London high. So right, technically, yeah, if you are trading this, that sell here is technically a continuation entry because this is the high of day right here. Looks like you entered on this. Same with that divergence with ES, lower high. Yeah, I mean, I can't say, what time is that? It's right after 9:30. I can't say I hate that idea, to be honest. Because we do have that running that high. You know, I really don't hate it. I guess you're also being aware of the other side of the market. But yeah, I do see what you're referring to there. I was watching micros only discrepancy in the micros and minis, which I didn't see that. I mean, it's usually not going to be that significant. It can happen. Like that there is on news, which is more common because the spread difference, I mean, they're separately traded. So the spreads can make that wick occur or change it slightly from the minis. And that's what's happening there. I don't really take that into account. So anytime I'm charting, I mean, ultimately, even if you're trading micros, I would still be looking at the mini chart. That's usually what I'll be doing. So could you have change bias because both NQ and ES had a higher time frame change in state of delivery on the 30-minute and hourly after taking the relevant low? In that case, is it okay to ignore intraday failure swings? The higher time frames are providing the change in state of delivery. So I do think there are cases for that. So you're basically mentioning if we have failure swings off the lows, if you were to go to a higher time frame change in state of delivery, maybe something like the hourly here, because this is technically, since this is the lowest low, running out the relevant swings, this is the lowest low. You would draw your eyes to the highest up close candle, the opening price, and would that basically drown out the failure swings at the lows? I think there is room to say that's possible. This case here, I don't like how clearly defined they are, but I think there is room to say that this does offset it a bit, and then you again wouldn't enter on that. You would then look for a new continuation entry after that's formed, and at that point you can pretty much say we're unlikely to go back to those lows. I think that is potentially fair. But yeah, it's different because ultimately, I mean, we wouldn't have failure swings and then on a 5-minute say like this is our change in state of delivery, but you're trying to use a higher time frame to filter that out a bit. I would say there's specific cases that's okay to do. If we get a strong, oh, there is SMT with YM. Yeah, so if you are using YM, which I think everyone's slightly different. I don't use YM for divergences, but if you are, or even looking at YM independently, like here, this is better. We're drawing the same idea pretty much. Relevant low, separation from the next one. This is opposing higher time frame, swing point. That could be traded off of. Now YM technically does, if we're looking at this, I think the continuation signature, this is a bit wide of a stop, but this is something you could be looking for if you were to get that close there. I think if the stop made more sense, independently looking at YM, this is a little bit better. Or if you are using it in terms of YM is a divergence, yes, there's no failure swings at the lows here. And you can use that to compare to ES and NQ. If we get a strong bullish close on the daily today, at one point do you now feel comfortable trading a continuation? Or at what point do you feel comfortable trading a continuation tomorrow off those failure swings at the lows, since you're trading far away from it now and the daily shows it's clear? So this is where I kind of separate these intraday failure swings. This matters a lot more in terms of my entry on this day. But let's say if we close bullish, I mean, the daily candle is going to look like this. I would still feel comfortable trading that to the upside. I would count that as a daily manipulation. And I would be not really worried about these in the lower time frames. But when I'm thinking about entries and I'm seeing these failure swings here on the lower time frames, that intraday high or low, that's when I get a little bit more cautious with it. But yeah, if we were to get a strong bullish close on the daily, that would be a valid manipulation on the daily time frame to look to trade away from. So yeah, this has been a lot of, I guess I would say more back and forth, not much follow through just because of how the market's been trading. So it doesn't really switch my plan, but yes, I'd be open to looking at that tomorrow in case this does close strong, because we have these sweeps. basically, yeah, all pairs there. Let's see. So yeah, obviously during this Sunday, we'll go through all of this again, pretty much running through each days of the week. I can talk about last week since we didn't get too much into it, if that's helpful, or if you want to stick on this week. If I'm trying to think back a little bit, last week was, what did I take? One trade on Tuesday. Just split these up. Monday. EU and GU. So let's look at CFD chart. And yeah, these here, depends, what's today? So at this, I was viewing EU and GU as more in a range from this low to this high. So basically viewing these as failure swings. And then if we are going to trade a day like this, obviously if there's no opposing manipulation, then it needs to be a breakout signature through this high. So you don't really get it on the daily candle in Wednesday. You'd have to look inside of today's trading. And this is the type of thing that we do look for. So running up into that high, if it is going to be a manipulation, it should run that high out, immediately turn, and obviously remain below that point. But this is that continuation signature that we do look for, which is that attempted manipulation, forming opposing closed candles, and then closing right back through it on this hourly time frame. So that is technically a breakout signature. Now, when you have that and you're getting into your charts, New York session, I think here is where there might be issues because we have 17 candle. It's going to be an hour earlier. Technically, if you're following the rules, you would not be trading in this candle. This would be your confirmation candle. So you do have the continuation signature. It would make sense to be looking for a breakout through that high. But if you're focused on more the New York session, by the time we get here, we've basically extended that entire move. And we've traded through that next relevant high, which could be used as a draw. Just as something to trade into. So New York session, I don't think there would be much to really act on from that point. But if you were looking to get up into that, you would be probably looking for entries beyond that continuation signature. True. So you could, yeah, if you're using GU, there, like if we're looking at this, yeah, it is technically making a low, which you can use as a divergence. I like to emphasize dollar a little bit more. It's pretty close there. But yeah, you could probably justify using GU as the SMT there and then trading within the London candle of that daily profile. And that's where you would be on the open of this, looking for your continuation. Gold, let's see, what did gold do? It's Monday. Yeah, obviously running out. 1 o'clock candle reversing. I mean, technically it would be one-sided at this point because this would start to create failure swings, which you wouldn't want to trade to the downside off of. I don't know, like if we look at this on the 15-minute. Yeah, that's a really large move down. By the time you get the initial reversal confirmation, this could technically be your continuation for the day to get up into that high. I don't know if you took a trade on this. if there's a specific question you had on it. This must have been, what, 3:30? There must have been some type of news there. Had to be. Yeah, by the time you get to, I mean, it's not a bad wick on the daily candle. This is the open here. Yeah, I mean, that's not terrible. Looks like the delivery kind of dies down, but that would technically be a continuation entry up into a high, which I wouldn't hate. This would likely turn, depends where you get filled on this. Would this make sense? Stop this. That doesn't make much sense. Risk to reward wise, if you were to get a better fill on this, because you want to get decent risk to reward to an obvious high. Yeah, it wouldn't really reach a good threshold to start managing that trade. Yeah, 9:30. There seems to be, I don't track it too much, but these days seem to be decent in comparison to indices right now. Just seem a little bit more choppy. I'll just ask you guys, should I go over the days from last week or just keep on from this current week and just answering questions? Whatever's more helpful we can do. I'd rather just leave it up to you. Took a trade on gold. If you're in that continuation, I don't know where you depends where you got on side. I mean, technically, based on rules, I mean, this is not looking great, obviously, at this point. But depending on where you enter, like, I'm not sure where you would have gotten on side. This doesn't seem like one that would have hit a threshold where you would start managing that trade. Which I'll usually set. I think a good starting point is 1.5R before you start doing too much with the trade. Let's see. I think so. I mean, there's nothing really wrong technically with that loss. I would say the only thing is if you're trying to weigh in the quality of the setup at that point, you don't have to take the first signature. If you're somewhat battling between, is this going to be a continuation to the upside? Are we actually going to reverse off this London high? Even though it is technically a continuation in that daily candle, you don't have to take that. You can still wait for another move off of it to make sure it's going to break down. That's probably the only extra step that you could really bring to that. So it's more something if you want to ask yourself, right? Like, you don't have to take the first one. If you really needed that added confirmation, you just wait for another one. When you trade currency? Do you trade futures or the actual Forex? I'll watch. So if you notice here, I have like the watch list is Euro, GBP, so the actual CFD charts. The futures charts themselves, that's what I'll be trading. But these here, they come off a little bit different, I think, because the amount of contracts that are being traded on them can create the charts to be a little bit different. Versus the CFDs are a little bit more fluid, and I prefer just to watch them here. So watching the charts on CFD, Euro USD, GBP USD, and then actually when executing it, position on the futures contract. They're going to track the same, but when charting, they'll end up looking slightly different. Do you think it's equally important, if not more important, to understand also when a day should be avoided? I would say, I mean, of course, yes, because ultimately there's likely more days you'll have to avoid than ones you'll have to trade. But it can be on the flip side of when you know what days to trade, you also know what days not to trade. I mean, you have to understand one to get the other. So yeah, I would say it's definitely equally important to know that. And that'll mostly come down to, I would say, knowing when to avoid it is the daily profile and just some basics on the higher time frame. Regarding the journal template on Notion, how do you differentiate between these headlines under setup, time frame wise? So to me, you don't necessarily need a market narrative and bias. I think it's good to have. So market narrative and bias is more so the reason why you think the market should go where it should go. And then higher time frame framework is mostly the daily. So if we were to mark out like a setup here, that would be, this is technically your higher time frame framework running below relevant swing. Could even mark out an opposing candle. That would be framework. Framework is more in the charts, what you actually see in the candles, things that are visual. And then intraday confirmation is most often your daily profile. So this here, technically not perfect because it doesn't have that New York reversal, but let's say this was your intraday confirmation, and you can even drop down to your reversal confirmation. And then when we get into entry signature, that's going to be 30 minute, 15 minute, 5 minute, your continuation entries that you find. So you would note out something like this here and any confluences that may come with it. So the time frames can be slightly different. So higher time frame is usually going to be daily, 4 hour, sometimes. Intraday confirmation is your daily profile. So 7 hour, sometimes hourly. Entry signature would be, it can be 30 minute, 15 minute, 5 minute. And market narrative and bias to me is more writing out why you should think, what's the reasoning behind what you're looking for. Can you trade, for example, GBP futures top step? Yes, I believe so, yeah. GBP futures, I don't really execute on GBP futures much, but it's going to be the same as, it's all under the CME group. So most firms are just going to allow any of those types of contracts. Did the overnight session taking out low of week void the day for you? So if we go back Monday, so I wouldn't say it voided the downside, I would call it. So this is what we talked about this morning. that if this is going to be a continuation, the only thing you're going to have to caution is this low here because it's a relevant swing. If we're going to manipulate this, well then the downside bias is not interesting. But it doesn't have to fully void the day. It can just mean that if we do get a manipulation of this low, well, then I have room to flip my bias and then find opportunity in the other direction. So it depends. It did end up voiding it for me only because when I go down to the lower time frames, it was leaving behind these failure swings, which I don't like when I'm going to take an entry. So if it looked something more like this, or basically you can just look at the micro chart, but something like that with the daily swing ran out, that would have been enough to void the downside bias, but then give opportunity in the other direction to look for. What do we? Thursday, Friday. Basically, anytime you have something that's invalidated, a bias in one direction, pretty much just ask yourself, if I go back to step 1 of the model, can I completely go through the steps and find a new opportunity in the other direction? It doesn't have to be overly complicated, and this is one where you could work through the steps again and find a new opportunity to the upside. What if you leave failure swings but price validates a change in state of delivery? This is where it gets a little bit, so daily failure swings, that's a complete non-negotiable for me. So something like, let's say this here, daily failure swings, I'm not going to trade away from that, even if there was a change in state of delivery somewhere in here. Nothing's going to outweigh that. Now, when we do have this intraday, we talked about this slightly. We look down. These are technically failure swings here. And there is room sometimes on these lower time frames to say that the change in state of delivery, if we use a somewhat of a higher time frame. So not getting too aggressive on this, but looking for, yes, we have failure swings, but let's see if we can get this close. I think there are times where it's fair to do that. And at that point, you can then look to get a new continuation and then trade away from that. But I would just be more cautious of that. Let's say on a daily time frame, I would not be using a change in state of delivery to start trading away from failure swings. Intraday, there is potential room for that to be done. But that's stuff that honestly can't really be put into, it can be, but it can't be put into specific rules. It's more based on your judgment. When trading gold and oil, is dropping lower than a 50-minute chart never an option for you? If yes, why? Recently, gold has been clean on the 5-minute and below. I might not be the best person to ask just because I don't trade them that often. I only say that because versus something like indices, where that 9:30 open, the news is so direct, it's just going to hit the market. And like even a 15-minute here, imagine you're trying to enter at that open. It's just too high of a time frame, even the 50-minute. You have to drop to a 5 to get any sort of signature or detail in price just because it moves so quickly. That can be the case in gold, oil, even Forex pairs, but they just don't have as direct of drivers. So that there usually can get away with sticking with a 15-minute because the market is just not going to move as aggressively or just move as quick. But I would say there's nothing necessarily wrong with dropping to a 5-minute as long as it's still valid, because there will be moments on GC or oil that it is moving fast and you may need a 5-minute time frame. I just haven't traded enough to see too much of those cases. I think on on euro, I've never dropped to a 5 minute or never needed to take an entry. But I also take way fewer trades on it. So there's always something to that. When it comes to getting an entry, you also weigh more if there are failure swings to the intraday high or low rather than random failure swings in the continuation. Yeah, so I probably do this more subconsciously, but the high or low of day is important to me. And then also on my entry, I don't want my stop loss on a clear and obvious failure swing. That's just not favorable. So those two are ones that I'll emphasize it a bit more. Other than that, if it was just a low, because the market has to make highs and lows to go higher sometimes in that continuation, it may just do that. You know, I'm not going to be pointing out every single one, but if they're very defined, very obvious, and it's, let's say, my entry, I don't want my stop loss to be on a failure swing that's very clear. Same goes with the intraday high and low. I'm a little bit more strict on that. But these little ones that are in the continuation, you know, it's like you can't get so specific. Yeah, it's just what I like to look for are manipulations. That to me is better defined and more one-sided for what to trade away from. So something like this. And the idea is that manipulations at the right points in the market are what give me confidence to start trading in one direction. So this here is an example. The low itself is relevant. So we are running out a low that is basically the extreme at this point. So the market has run out an area with nothing else in the area to basically take out. So I am very confident if I see a manipulation at this point, that's going to matter in the market. Versus a failure swing is going to be something like any of these really, if we were to draw these out. So that was the relevant low in this case. Versus if we had something like this, so we'll actually mark that back out. These are technically failure swings. We're just down to that relevant low. This plays into more of what I consider just a guessing game of, do we run this out? Is this the manipulation that should occur? Should we now turn higher? Is this the low that should be put in? Should we now turn higher? That's where I don't focus on these swing points. So if we make failure swings to them, I'm not actually sure if this is where the market should turn. But if we make that relevant low and we manipulate that point, well, then I know once that happens, this is where we should really start turning. Everything else to me it becomes more of a guess, and I'm not trying to do that. So that's the process of, I want a relevant swing, and then I want a manipulation of that point to then start considering actually trading away from it. Failure swings to me is a little bit less defined and more of a failed reversal. We can also see continuation signatures through them. So you can have relevant swings and break out from them. We just had someone asked about, what was it, euro? So relevant swing on the daily. Doesn't always have to be a manipulation. We can fail manipulations and continue through. Failed manipulation, closing back through opposing candles. So no manipulation means continuation. That can also occur as well. It's basically the two ways you'd be looking for price to trade at these daily highs and lows that we note out. The goal is to basically leave no doubt that what you're trying to track is actually going to matter. That's really the basis of it. if indices don't reach yesterday's high today, what would you look for to trade them tomorrow during London? So if this depends where they end up, if it doesn't reach the high, it's tough to say without the daily close. I don't like trading this back down, but it's technically not a failure swing yet to this high. So, I mean, we can just pretend this isn't really helpful because it's going to close differently. But I usually, when it's like this and we're just trading off these relevant highs and lows and the market's pretty choppy, I'm pretty much going to go with my initial bias for the most recent manipulation, which would be this daily low. And I would go into the day looking for potential confirmation off of that to get up into this high here. It's really just a process that I'm going to continue to follow. And it would have to be in respect to the daily wick, manipulating the low, 50% of that daily wick. If the bullish daily profile was above that, I would trade a continuation. And that's if it closes strong. We still have, 5 hours of trading left. Plenty can happen. Yeah, no, we did talk about it, but I'll go over this. So the daily is manipulating a low. But to actually want to trade this off the low, I'd like to see, like, ideally this would have looked something like this if we're going to counter it. Really one of two things. We could have had wicking out that intraday low. Great, that's fine. Or we have that. Right, that's good as well. Either one of those scenarios. But since we're lacking it and we create this here, it makes it less interesting for me to trade this away to the upside. So intraday for an entry, I'm a little bit more strict on it. If we're going into tomorrow, this does close strong. The daily is still a manipulation. I would trade a new continuation away from it. When looking at the hourly, seeing what the weekly candle has done, it's really range with no, yeah. I mean, this is, a show of why I haven't really had any opportunity yet. This is the weekly open. Lots of back and forth. Failing reversals, failing continuations. So this was probably the closest we had. So when marking out those relevant swings, I'm going to just pretty much exclusively use the daily. I'll drop to the 4 hour if I really feel it's necessary. But the daily here has what I'm looking for. It's a swing point here on the daily. And anything hourly, I won't focus on too much beyond this. So once I have that drawn out, that's what I care about. I know if you go down to the hourly, we have something like this. But I don't really count these as much. So the daily, I'm going to weigh this the most, and then that next low. Lots of separation to this low. So this becomes the relevant swing that I'd be focused on. Yeah, I can go over. So, the last week, there's a few things we could talk about. We do have a trade. So I'm trying to just jog my memory a bit. We did talk about going into the week, looking for, this is again, that most recent manipulation or signature to trade off of, seeing if Monday would confirm that, whether it's going to consolidate above this here and then manipulate on the following days, or if Monday itself reverses and then starts to trade off of it, and then Tuesday becomes a continuation. And that's what we had here. Monday did put in a low, expanded off of it. We do not need to return to Monday's low. We have an opposing draw. The daily agrees with that. And then Tuesday, looking for a continuation to the upside. This here, if I go, just so we can keep track of this. 18 candle, opposing run. 1 o'clock candle, reversal. Look for 8 o'clock continuation. If we break this down. See, this is a better example of what we would have liked to see today. Running out that low, initial reversal confirmation, continuation here potentially, and then also we could look towards the open as well, because you have either positioning in the 1 o'clock candle, putting in a reversal, or you wait for 8 o'clock, and then you would look to enter after that. You really have two options. We could look towards, I'd say, the New York entry. I know some people took it earlier. The continuation was basically having a defined series of opposing candles, running out short-term lows. That could be a valid entry. We also have post-open. I know some people took this as well. If we go back and forth between ES and NQ, much better defined on NQ if you were to take that as an entry. This was a pretty decent expansion day, so I know some people even took ES on this higher continuation. So this here being a divergence after the open. If you look at these lows, comparing them back and forth, ES ended up making higher lows, so having additional continuation entries in that continuation, because we're ultimately looking for that highest high to the left. So this was an ideal day to me, being able to position prior to the open, holding through that as it's already breaking away from my entry, so I don't have to worry about getting stopped out on any volatility. But you also have opportunity around the open to take continuation entries. And then past this, whenever we get a continuation day, I'm pretty much going to hold that bias, because we know at this point we are making failure swings to this high. So everything past this, I just want to see if we can set up continuations to this high, because we know price should go up to it. I think Wednesday, did we have CPI last Wednesday? I believe that was, oh, see, now I'm getting my days mixed up. Last Wednesday. Okay, last Wednesday was NFP. So Wednesday did not have CPI. This would have been not something you would short, because we have failure swings out the highs. And then again, you roll into each day after this, just basically looking for continuations up into the high. And I did not find another trade in the week. So here, Thursday, that was some 8:45 news. That was surprisingly volatile due to, because that event there, this 8:15 or 8:30 unemployment claims. That's from, let's see, that's 8:30. Not usually going to be that volatile, but it does spike up into that high. And I do know you could be looking for a potential continuation off of that. Now, if we were to look into these candles, nothing on the 15-minute, but let's just say you were looking towards the 5. This technically could be a valid entry if you're going to counter that off the high. Wouldn't mind that too much. ES and Q after it manipulates that relevant high. That could be something too. Frame back to the downside. Here is the open coming down. And then after that, it's just NFP. And to me, I didn't see any opportunity on NFP with the way that it hit the market. So if we go back, daily. When I hit the market, I wasn't able to watch this too much. The overnight session, I know there was some news here, so the overnight session got a little bit active. Once NFP hit the market, you have that same idea of you're not going to counter this back into the range. So your only move, and this is what we talked about, would be if you're going to trade a continuation up to this high. that would have been all that you have. 8:30 NFP hits the market. Your only option is to trade that slight bit of continuation left to get up into that high. And I know some people did catch this trade, finding a continuation in there. NQ was a bit weaker, didn't fall through as much. But that would have been basically the absolute only thing. You wouldn't want to counter this back into the range because we know we've made a very large run from that daily open. So it's uninteresting at that point after the news release, after the open's already driven price to the upside. I wouldn't be interested in countering that back into the range. It's not the type of trade I'm looking for. So decently simple, just not high expectations for NFP on something like this because there's only so much more that's left on that trade or for the day. I don't know if I would find an entry in this if I was watching it. I more so, well, that's probably the best one that I see. I more doubt that I would take that trade. I'm looking at both pairs, ES and NQ. One of them looks more bullish, runs at a short-term low, while the other pair makes a higher low. Which one would you long after the continuation is confirmed and why? Mixed data on the situation as to which makes more sense or which makes a more energetic run. One of them looks more bullish, runs at a short-term low. I usually will emphasize, I don't know if you're talking about when it looks more bullish, like if it's trading more aggressively to the upside, let's say. I'm usually going to emphasize that over a divergence for when choosing which pair to actually enter on. So if I see one that is clearly trading more aggressive to the upside, then I would rather enter on that one when you compare similar price swings and there's just a complete obvious difference. Then I would probably even weigh that over a divergence that happens very quickly. So that's what I would do. I think there's definitely steps to understanding which pair to be trading. I mean, absolute introductory level is just go, if there is a divergence, take the one that made a higher low. If you're trading longs, take the one that made a lower high. If you're trading shorts, if there is no divergence and there's no difference in strength and weakness, it's usually easier just to take NQ because it's more volatile. And then the next step of that is trying to compare price swings and just visually looking at the difference between how they're trading and showing that strength and weakness there. I think that usually is going to have a bigger impact on how it follows through than a divergence. If I see a signature before New York Open, can I set a limit order and fill when New York opens? See a signature before. I guess it would depend on the context of that. Usually I won't set limit orders anywhere, especially like after an open. I don't know if there would be much of a case where you would have to do that. So it would be more so if you see a signature before the New York Open, it's either you're going to take that or you're going to wait until after. And I think it just makes sense to market order on most trades. At least that's what I do. So it's probably unlikely you would need to do that. So 5-minute divergence isn't as significant if a pair is showing to be more aggressive already. To me, no. I mean, I think it's more uncommon for that to happen because usually the stronger pair is going to make the higher low or the weaker pair is going to make the lower high anyways. But in those one-off cases, I would still, if there is that clear difference, I would still focus there for which pair to actually enter on because that's just, it's usually going to follow through that way. there's some cases when the strength shifts from one pair to the other. Yeah, I think most often that can happen after the open. That's usually the most common time for strength or weakness to flip. So if it looks clear before and then the open comes through and then it completely switches, like, yeah, that can definitely happen. I think I saw someone asking if, like, the summer months, I don't know where I saw this, if you should be trading in the summer. And I don't think it's going to make much of a difference. When people ask about like certain times in the market to be trading, like, I would say this more recent price action isn't really a representation of the month that we're in. It's more so just a period after a lot of volatility. The market's going to cool off for a period of time. So the summer months, I think any given month, I'm not really going to change my approach, because everything we're supposed to be doing is going to, you're just naturally going to take less trades if the market is not favorable, if you're following the right things. It's like, would you say last week and this week have been challenging for trading the expansion model? I would say it's more so, I mean, yeah, there's definitely certain difficulties that come with this. The more difficult part is being able to wait it out. And I think that goes for really almost any approach. Because, I mean, just like today, you'll move through the steps and then you almost hit a brick wall that you can't really go past. And usually it's not hard to understand or too difficult to know when there's not a good opportunity. The harder part is to recognize that and then to just stop. And it only gets harder the longer it acts like this. But I mean, I always know that things just come in cycles, so eventually it'll break out. 2025. I mean, yeah, what do we, I feel like it has been off. Well, I mean, this was pretty good. I can't complain too much about this. It's the back half of quarter, I don't even know, quarter 2-ish, 3. I guess we're not technically in. Are we in Q3 yet? I don't think so. What's up, Trista? Yeah, the first half of the year wasn't terrible. All-time high PA. Yeah. I mean, there's been some patches of really, I mean, the last one that I can think of is, this was high volatility chop. This is low volatility chop. This was pretty uneventful for me. And that's more what I mean. Like, this can extend out for a certain period of time. And then you get something like this. I think when you think more long term, there's just periods that there's a lot that you can do with it. And then other times you just have to sustain it through. This was really good, yeah. Or like terrible for a long time. Pretty good, pretty good. Pretty tough, pretty tough, pretty good, pretty good. Really difficult. Like, that's just, when you zoom out, that's just how it is. Daily chart is basically the first time frame that I'm always going to go to. So I will drop to a lower time frame, but only after the daily has something that I can work off of. So anytime you notice if I'm going to a new chart or starting something, it's always going to go right to the daily. And then if there is something there, then I work down from that point to a confirmation and then to a lower time frame entry. But I also won't go above the daily. So I don't care about the weekly or the monthly. The daily is also a maximum in that way. is that how you avoid taking trades, but only taking trades if the daily is supporting the bias? I'd say there's certain times where, yes, that can be the case. But there also be times where the daily remains technically valid for something to follow through. But when you break down, because this is why we layer a model like this, because there has to be, sure, we can have the daily aligning, but we also need a confirmation. What if that confirmation does not exist? Well, then I also can't take a trade on that day. What if the daily is supported and the confirmation is supported, but the market just breaks away and gives no entry signature? Then again, I have no entry or no actual trade to execute. So it doesn't always have to be the daily doesn't support it. That can be a lot of the times where you start in the daily and there is nowhere to go beyond that. So that just means I don't move down to confirmation because there's nothing to confirm. So I would say sometimes, but then also it can be other steps as well. Current price action, we went over why I couldn't take a trade to the upside this morning. I'll have to wait on the daily close, but if this does close strong in this condition, I'm pretty much going to be focused on the most recent framework or manipulation to trade away from, and that would be off this daily low here on NQ, here on ES. My initial intention is always going to be trading continuations off of that if a daily profile aligns. You stay cool if you get no trade for days. Excellent quality so far is hardest thing for me to stay away, taking low quality trades. Yeah, I mean, whether I'm just used to it or it's just how I am, I just feel like you just reach a point where you've done it enough times that, I have a reason behind doing it. If I didn't know why I was waiting, I would definitely feel pretty impatient. Or if I didn't have a past experience that, I chose not to wait and it just ended up burning me. Or I ended up waiting, I avoided losses, and then when, the good periods come back around, a new opportunity comes back around, then you get to benefit from that. So you can only experience something so many times before you start to get comfortable with it. So no trade this week so far. Yes, I'm recording this. So yeah, this is one that I will upload. You were looking for the downside initially, though the open was not ideal. What made you not take the first 5-minute continuation on ES? Had divergence. What were you looking to happen to consider shorts again after the open? So to me, what I would have wanted to see is, if we're going to continue, what I'd actually want to see happen is, we're already at this low. We're already in the continuation. We don't need to return back to any high at this point. If we're going to continue through this low, we can focus on this here. But then also, if I go down 30-minute, I go down 15-minute, this is where I want to see price not manipulate, especially this low here, because we're trying to pretty much validate that a manipulation is not going to occur. This is that manipulation. If we were to get a continuation signature through this, basically 8:30, 9:30 coming through, giving that continuation signature through these lows, staying held down, that would have been valid to see a continuation. When it comes back up, technically you can still look for it. It's not really the type of trade that I'm much a fan of at that point. So technically valid, and you just have to decide if that's something that you would want to enter on, or if you want to wait for another continuation, because I'm also aware that there's potential opposing framework on that. So no, I don't hate this. It just depends what type of trade you're looking for, or if you were wanting to get added confirmation this is going to break down after making this entire move back up. So I wasn't really looking for much of shorts after this expanded higher. So it kind of makes the day uninteresting for me. And that also may be me just being subconsciously more conservative while the market's been slower. I would have liked if, well, yeah, it's tough to say. Like if this candle body was through that low, and then we got a close through here, you pretty much, and if the news agreed with that, you could pretty much be looking for a continuation pretty much before the open. Yeah, I mean, by the time the open comes through, I try to think back of where my setup can exist. If we're trading up here, I'm not interested in the upside because we have failure swings at the lows. And at the same time, if I was looking for that as a continuation, that should have remained held down, given that signature at this low, and then I would look for the downside. That idea is also not playing out. So I'm thinking to both sides of the market. At that point, there's nothing really left for me. So almost once that news trades to the upside, I don't have much that I can do. The market is telling me both sides are uninteresting. So, I mean, you just have to think about what you're demanding from the market. And if at the point it's trading at, is it even possible for it to align with what you want from it? And when I think of those two scenarios, by the time the market's up here, it's invalidated both of them. So I don't have to predict it from that point. I just have to know it's not really aligning with what I'm looking for. So whatever happens after is not really any of my business. This was, yeah. I mean, it's very close. That's literally, I mean, I'm sure that's half a point from being a manipulation to trade away from. .75, yeah. I mean, it's tough to get much closer than that. But nothing you can do about it. Yeah, for the people that use YM for SMT, it's fine because YM doesn't have failure swings like that. I just use ES and NQ for divergences. There'll only be like very specific scenarios that I'll start considering YM. Yeah, I mean, that's a sacrifice. I mean, removing YM, you're going to find, at least for divergences, you're removing another factor. That usually means you're going to take less trades with that. It's always kind of a balancing act of, does adding this and giving me more trades actually result in more money, or does removing this and taking less trades based on the outcomes that I get from it. Is that making me more or less money?